This one will be clear. All right, so tonight we're going to talk about insurance, personal finance 131. We're going to talk about property and also auto insurance. So, again, like I was saying, or I was just about to say, was the whole notion of insurance, how it's structured, the term insurance. It's changed a bit lately. Change is probably the wrong word. It's been used incorrectly lately. Let's put it at that. It'll make more sense as we talk about it. So, Chapter 10, Property and Motor Vehicle Insurance. We'll be looking at a risk management plan, discuss the importance of property and liability insurance, explain insurance coverages, the factors, that influence the coverage, and then factors that affect the cost of auto insurance. So, this is where I was going with insurance. When they talk about, especially in the healthcare insurance, they talk about Obamacare and they talk about pre-existing conditions. That's not really insurance. That's a government program to subsidize folks, and it fulfills a societal need. But to call it insurance is not correct. You cannot have your house burned down and then call up, the property insurance folks and say you have a pre-existing condition, your house is burned down. They will not issue a policy. Your house is gone. And the same thing's true about the car. We'd all like to be able to call and say, yeah, I meant to get insurance, but I didn't. So now I've got this pre-existing condition. So anyway, that is not insurance. Insurance is protection to mitigate risk. And it's really, the situation with insurance is, bad things are going to happen to some people sometimes, but they're generally not going to happen to everybody at once. And so by pooling things, companies are able to not only, take care of your risk, but also make a bit of money by spreading that risk out. So it all works out in the end. But it does fulfill a need, because without insurance, businesses couldn't function. You can function in terms of driving a vehicle and the rest of that. So, the types of risk. Risk is that uncertainty by a strict definition, uncertainty or lack of predictability. So, peril is what's going to cause the problem: the fire, the windstorm, the hurricane, the earthquake. Hazards are things you do that make that risk a bit worse. Drunk driving and sloppy wiring and other things can present a hazard. And then risk management is how you take care of that. So pure risk is what's insured. You don't, this isn't gambling, and that's what the next slide was going to allude to. You can't insure against that. That's not a legally insurable risk. Now, there may be other things, but technically, again, they're not using the concept of insurance correctly. It's got to be, for it to be, insurable risk, it's got to be accidental, unintentional, and that's pure risk. That's how it's defined. But speculative risk, this is gambling, betting on the stock market, things like that. That isn't technically insurance when you have some sort of program to bail you out. Again, that's not classical insurance. So this thing, they try to explain it a little bit here, this risk management techniques with the risk avoidance, risk reduction, risk shifting. They're valid concepts, but this slide doesn't really help you out much. The next slide will. So risk avoidance. Can you avoid the risk? Well, in the example of a car, you could just not drive, and so that's not very practical. You're always going to have some risk if you're engaged in that activity. Now you can reduce that risk, drive a little slower or within reasonable speed, wear a seatbelt, things like that. And then risk assumption means that, okay, we're doing something that we know involves some risk, but we're going to suck it up because we need to live. We need to get out of the house. We need to do a few things. And this can be to the point where, like, the university and federal government and things like that are what they call self-insured, where they don't have a private insurance company they're a big enough entity where, again, that whole theory of little individual bad things. There's so many folks that aren't going to have those situations that when one person, one member of that organization does, it's going to spread out that risk and be cheaper for them. Insurance companies do have a bit of a profit margin, nothing excessive. They have people, actuaries, that try and calculate things to make sure they know what their risk exposure is. But anyway, yeah, self-insured, you'll see some government entities do that, or some very large corporations possibly do it. Now, risk shifting, this is where you realize, for example, driving a vehicle, that if I'm hit with $100,000 worth of medical bills for somebody else, or even for myself, I'm not going to be able to handle that, without it greatly disrupting my life. So I can pay somebody else to basically protect me from that risk, and so that's risk shifting. The risk hasn't gone away, but you just put it in somebody else's lap. Now, the insurance company, they're going to be very interested now in this risk reduction, bid. If you got tickets, you have a propensity to have a few cocktails and get behind the wheel, then yeah, they're gonna want a lot more money because you present more of a risk to them. So who should be insured? How much? What kind of insurance? So, because of the societal type things, there are a certain group of folks who are like, screw it, I'm just going to drive, and, tough luck for people because I don't have any money, so you can't get any money from me. Well, so that creates some larger societal problems. So that's why there's mandatory insurance. At least, not everybody's got insurance, but legally they're in trouble if they don't have insurance. And how much insurance do you need? Well, there's always going to be state minimums. They vary from state to state. Insurance is a state program, but you can always elect to get more, especially if you've got more assets. Because if you got $1 million, they may very likely come after that $1 million. If you only, if you have nothing, your lawyer or whoever will probably advise you not to make a big deal of it, because you can't get money from somebody who doesn't have it. You'll just get the money from the insurance, and that'll be that. So, planning an insurance program, 4-step process. Your goals, plan action, put action. So again, they could do another one of these circle type things like they like to do. Go figure. Everything's a process, but it always ends up with a review. Everything's just, once you've made a decision, you always have to go back and review it and update it eventually. Importance of property liability insurance. Yeah, I don't know that in recent years. I mean, 64 was a long time ago, and that was pretty devastating up here. So things are always happening. You hear a lot more about it because people, tend to move out towards the coast more, and those guys are getting clobbered by hurricanes and in fires. They're moving into places maybe they shouldn't have, or more further out in the woods, and they want to be. So anyway, people kind of bring some of this upon themselves. I don't know that Mother Nature's really that much worse than it's always been. But you should still have the insurance. Potential property losses. Yep, your home, auto, furniture, all the different damages, fire. The smoke and water can really do, as much damage or more damage than the actual fire. So, and then the loss, robbery, vandalism, arson. So you have different ways, things that you want to be protected from in terms of liability. You have the traditional liability that you're thinking of, hey dude, you trashed my car. So that is a direct liability. And in this case, in this type of liability, we're talking about something that was an accidental loss. In negligence, that's where, you dug a big pit in front of your yard and then covered it up with some leaves or something. I mean, you didn't put any signs out. You did something that was negligent. So they're going to penalize you even more so for that if you're found to be at fault, and you're likely going to cause an accident, and they're likely going to say that you caused it. So vicarious liability, this is where you're carrying it for somebody else, usually for a minor. Next one, homeowners insurance. there's a lot to be said here in terms of homeowners insurance because you can think you're insured, you can carry insurance, but the legal limits aren't quite as strict. So the amount of your insurance may be less than what you want. Now, a lot of times if you don't own the home, the mortgage company is going to force you to take some sort of insurance because that home is collateral, and so they really don't care a whole lot about you. They just want to make sure that their interest is secured. So they're going to probably force you to take some sort of insurance, but just to cover the structure, they could, they don't care if your flat screen and your, clothes and couch and everything else is gone. So you want to definitely look at that, and then you also want to look at, what else you have that's kind of unusual. Say you have, a lot of weapons, a lot of guns, you have a lot of cameras, a lot of jewelry. There's going to be strict limits on what they'll cover, and they aren't going to be very high. Maybe jewelry, maybe $2,500. Well, if you've got something that exceeds that, it needs to be itemized, and of course they're going to charge a little extra for that, and that's called a floater or a rider. An insurance rider is a term you often hear. So anyway, those are for high value items, but they need to be spelled out. And in the household inventory, with documentation, the easiest, quickest way to do this is everybody's got some sort of digital camera available. So obviously you don't store this, right inside the house next to everything else that potentially is going to burn up. But it's far easier just to walk around the home with a video camera, some sort of video, something, and then compile a huge list. I mean, you may want to still compile the list, but a picture, is much more powerful. Medical payments and coverage, we all know, what's happened. Medical payments, you can get in whatever, you can spend a lot of money very quickly, especially when you involve like life flight helicopters or extended hospital stays. So 100,000 or more is what they're talking about here. And in the umbrella policy, they're talking about up to $1 million. So things can get very high, and the amount of insurance you need depends on what your assets are. If you don't have anything, if you're in college, don't worry about carrying $1 million worth of insurance because you're generally not going to make money on insurance. But if you have a lot of assets, they will certainly have no problem taking them from you, especially if you're negligent. Specialized coverage, endorsements, so earthquake, damage, floods. Sometimes they get really specific with these things, and they're kind of a scam. You generally you don't want a bunch of little individual policies. You want one policy from a reputable person, and not somebody who's knocking on the door or some guy you saw on late night TV. It's better to make sure you've got a comprehensive policy, because there's always a lot of exclusions if you deal with some of the less reputable companies. Renter's insurance, a lot of you may be in a rental situation right now, and that's smart. Again, these can be $100, even as low as like $60 a year, depending on what you have. But it's important. It doesn't insure the structure, it doesn't insure any of that stuff. It's just for your stuff. And again, if you've got stuff that's quite valuable, then again you want to itemize it in there to make sure it's done. And like they say, a lot of folks don't do that. They just sort of blow it off. But it can get pretty painful. You go to even clothes and things like that. If you had to start from absolute scratch, which some of us probably should, but anyway, it can get pretty expensive. Homeowners cost facts. Full coverage rather than co-insurance clause. An actual cash value less than rather than depreciation. So what the real term that they use here typically is replacement cost, and because that's what you're going to be forced with. You're not going to go looking for used TVs because they'll depreciate couches, TVs, clothes, everything, and so you'll have a total loss of what you think is about $50,000, $100,000 worth of stuff, and they'll cut you a check for $5,000 and say, it was all used. So unless you're going to go buy your stuff on Craigslist, you need to be talking replacement costs, where you can go buy new replacement stuff at the store. How much coverage do you need? So replacement value of the home. Again, I almost got scammed on this where it was Wells Fargo. They told me that I was underinsured, and what they were doing, they were looking at the value of the property if I went to sell my home, and they said, oh yeah, it's worth, say, I don't know what it is, 350,000, and they said you're only insured for 200,000, and you need to up your insurance. And it's like, wait a minute, whatever happens in terms of a fire, earthquake, flood, the property's still going to be there. All I need to be able to do is replace the structure. So the land value, you don't insure land value, you shouldn't. So it's the value of the contents and the value of the home, the structure, and liability coverage. Of course, some guy trips on something. And then protection for the individual items, the rider type thing that we talked about. So replacement value is, now they're using that term, and that is what you want. May limit replacement value at $400 400% of the cash value of the item. You got to read the fine print if they put that sort of language in there. It depends. Sometimes if the technology's greatly changed and it's something like a flat screen again. But again, those things have come down in price. You can probably do pretty well. Costs 10 to 20% more than the actual cash value coverage, which for me it's money well spent. I mean, that's the point of having insurance, especially when you're in a crisis type situation. You want to go to the store and buy new stuff. You don't want to be looking around and shopping. You just want to get through that and move on. Factors affect home insurance. So location of the home, depending on I guess it'd be the perils that are prevalent, earthquake, fire, types of stuff like that, type of structure. Again, roofs though may have a factor. A cedar shaped home maybe more prevalent to burning down, things like that. And the deductibles. Obviously, if you're willing to accept a higher deductible, you can probably get by for a lower amount. A deductible is the amount you got to cover before they come in. So if you have, like, say, a $500 or $1,000 deductible, the price is going to be quite a bit cheaper because they know you aren't going to be, bugging them about stuff, because it's going to cost you $500 to $1,000 every time you bring up some trivial item. But then again, if it's your fence gets blown down and it costs, $1,100 to get it fixed, and you got a $1,000 deductible, yeah, the insurance company's going to write you a check for a whopping $100. So, reducing home insurance costs. So, smoke detectors, yeah, they'll run through a whole litany of questions, and they do this with auto insurance too. Does it have airbags? Does it have this? And most cars all have that stuff, but alarms and things like that. And before you even call to get insurance, they may come out and do an inspection, they may not, but you definitely, if they're asking you whether you have a smoke detector or not, whether you have an alarm system or not, the answer to those questions should generally be yes, and then get those items in the house. Because actually, if you do have a loss and they can prove those items weren't there, then it's bad on you. But if you say you don't have them, your rates are going to go up. So, yeah, again, you can go on the internet and check these things out. Insuremarket.com. I'm not a big fan usually of anything .com for consumer type stuff, because they usually are sponsored by somebody, and Consumer Reports has almost been hijacked. So you need to talk amongst your friends. You need to go with a reputable company, and you need to get various quotes. So I'd feel pretty comfortable if I picked 2 or 3 local companies and got some quotes, and maybe even one that doesn't have much of a presence, but if they were significantly cheaper. Everything I said about banking with, in fact, I mentioned my bank, USAA. Oh my gosh, I've spent weeks now trying to get out from under them. What they did was, I had a savings account, and I found out I've been paying a lady's cable bill since last February. It wasn't an account I ever used. I had $7 in it, but they started charging against my overdraft on my credit card. So anyway, it just, and the bank was just not whatever. But the lady, she charged it in her own name, no identity theft, just had my account number, and rang it up. The bank didn't say anything about fraud, didn't give me a phone call, and they're not getting involved in me getting the money back. So I will get the money back, but anyway, because of that, I'm no longer dealing with USA, and nor would I expect anybody to. But anyway, that's up to you. I don't think anybody on their little the homework assignment mentioned sticking with USA, so I'm not feeling like I gave you guys bad advice. Identify the types of automobile insurance coverage. Okay, so the states, like I say, insurance is a state issue. States get to basically set the limits, and they can have requirements. Alaska's kind of unique too, because Alaska had a lot of the villages, kind of out in the bush, and where this mandatory insurance wasn't required, which is, makes it different than other states. And also it makes it nice that it is a state-run thing. It's not like a one-size-fits-all. We aren't having to carry limits that, somebody in New Jersey wants because, of New Jersey problem. So it is good that it's a state problem, or state thing. These are, the recommended limits that they have, this 100, 350. But the Alaska limits, you can see down below, are a bit less, 50,000, 100,000, and 25,000. So, Alaska, again, is kind of a big boy concept. They're telling you this is the minimum you need to have. Most people want to get higher, but again, that's your business. So, but the important thing, the thing I'm trying to get out of this, and you'll see it again on the homework problems, is when they quote these numbers, they'll come in this series, that 100, 350. The first one will be one person in an accident, and then, the 300,000 thing, that's for the whole car, and the 50,000 is property damage to others. So that bodily injury liability is the first two numbers, and the property damage is the second. So that property damage, you start knocking down guardrail, you will pay for that. And obviously the stuff's not cheap, but neither of the folks are going to go out there and put it out there. And it's a per foot charge. So yeah, don't do that. So anyway, these limits are minimums. So again, as your situation evolves, as you start to get a home and other things, if you exceed these, limits in terms of damage, yeah, they'll start putting liens against, your property. So you will have insurance. By law, you're going to have that as a minimum. But again, that's a starting point. Don't stay there once you start moving up. Bodily injury, so legal expenses, medical expenses, lost wages. This stuff can get crazy. I had to have dog insurance in Germany, and there was literally a guy who, the German guy's riding a bike. This guy's dog, his big lab, comes running out of the bushes, scared the German guy. German guy falls over. He's a roofer. He can't work, and this Brit guy who owned the Labrador, the Brit guy's having to pay until finally the Brit guy just basically left the country, went to Corsica or Sardinia or someplace, and just it changed his life drastically just based upon the lack of insurance. I had like $1 million dog insurance, which was the law over there. It wasn't very expensive, but just the same, there's all sorts of things that can be insured. Okay, getting back to motor vehicle stuff though, bodily injury, and then medical payments coverage. So, the medical is just for the medical. The other one is for a little bit broader. Uninsured motorist. So, hit by a person without insurance. So, even though it's a law, it still happens. Your car's still trashed. And the no-fault insurance, this is just, where they don't even care who's responsible. And the truth is that the insurance companies, if you're involved in an accident, they still hold you at fault, even though it's not your fault. Even though you get T-boned by somebody, you could have been driving more defensively. So accidents are never a good thing, but no-fault insurance is an attempt to mitigate some of the legal action for the small-time stuff. If it's a major accident, then there probably is going to be faulty. The ambulance chaser kind of guys will be out there in force if there's injuries. Property damage liability, so covers the other person's car. Collision. Now, collision is something that you do need to evaluate kind of as you go, and what you'll want to do, unfortunately, even though you love your car, there'll be a certain point where you'll pull the collision off of your vehicle, because it's just, let's say you have a whatever, some old Camaro, like a 68 or a 69 Camaro that's your baby, and if you're carrying collision on it, you're kind of throwing your money away unless you've had the thing appraised and gotten a value established. But they don't look at necessarily the condition of your car, even though it was the nicest old car out there. They just total it and write you a check for a few hundred or $1,000. So collision insurance can be quite expensive. So I had a Dodge Viper, it was a 94 Viper, just perfect. It only had 12,000 miles on it, but I could not put collision on it. If I kept collision insurance on it, I could basically buy a new Viper every 18 months with my insurance bills. It was going to be something like $3,000 per month for collision insurance, which is just, anyway, you just had to be careful. It was a dangerous car. It didn't have anti-lock brakes. It had too much power for most folks, and it was just, there were very few folks who did crash those kind of cars, so that's why the insurance was so high. Comprehensive physical damage. This is, the stuff where, let's say you're not going to be driving a vehicle, and you're just going to park it for the winter. Maybe it is a, summertime car. Keep the comprehensive on it. You don't call the insurance company and cancel everything. Maybe if you're putting it inside your garage and, your insurance company agrees that it'll be covered under your homeowner's thing, but anyway, different companies have different policies with that. But if it's parked anywhere where it can get stolen or whatever else, just keep the collision on it. My neighbor does that. I think he pays $7 a month. It's if you're not driving around and you don't have to have that liability type, getting in an accident type coverage, it's very inexpensive, and it's probably well worth it. So collision's very expensive. Keep it just until the car gets a bit old, and then you're probably money ahead to cancel that. And comprehensive, you'll always probably want that. Other insurance coverage, wage loss insurance. Yeah, I don't see that too often. Towing and roadside emergency service, I do that all the time. I don't have any real nice cars anymore, but I got a lot of semi-beaters, and yeah, it's a couple $3 a month, and it's nice just to be able to call the tow truck and they come get you and tow you to the shop or whatever. It saves you money because it just makes what would be a major problem, it just kind of smooths it out. I had insurance when I was in Germany again, and it covered, because I did a lot of skiing, it would cover the helicopter getting me off the mountain. It would put my dogs in a kennel. It would, take me home on the train. And anyway, wasn't that expensive, $100 or something a year. But it only covered in certain instances. But it was offered by a big German company. But very extensive coverage. So the amount of coverage, this depends on, again, what your assets are. Here they're saying the 100 to 300,000, which is reasonable, with $1 million umbrella policy. So those are normally what's quoted, and that's probably a good place to start. Again, Alaska's got lower limits, but that doesn't mean that's not a recommendation. That's just a, again, big boy approach. You should probably get more. So property values. This is just for the liability business. So, the guy rocks across your thing, trips on a rake, slips on the ice, whatever. Some of that, though, is again, were you negligent on having ice out there? I think sometimes when people shovel too much, they actually smooth it off. I actually prefer kind of crusty snow. But anyway, you'll go to court and you'll need some sort of insurance. Automobile insurance premium factors. I'm kind of preaching to the choir. We all know about this. the Dodge Viper, I think they had a scale of, I think they had 32 different classifications, and the Viper was 32. I don't know what was worse, but most people don't drive those kind of vehicles. If you've got something, you know, excessive, that you're going to pay a lot more for insurance, and obviously if it's a lot more expensive, and theft rates. And it's funny, it's not always, they don't always want to steal the real expensive ones. They want to steal the ones that are kind of marketable. So you may have I don't know, maybe an Escalade or something that's not like a super, well, I guess it's a high-end car, but they may be prone to being stolen more. So rating territory, where you're at, and also, here in Alaska with all the ditch divers and stuff like that, you're probably going to pay a bit of a premium just because of the number of accidents that occur in the winter, especially. So we aren't right near a border. We aren't really near the Mexico border where they're going to be taking things down to Belize or whatever. So the theft is probably a bit lower because there's not too many places to take them. The age, sex, marital status. Men are more expensive, younger's more expensive. Driving record is huge, and if you're a drunk, you got problems. So the assigned risk pool, and this is like the SR21 here in Alaska, that means that you got somebody that the insurance people don't want to touch them. But guess what? Again, for society, somebody's got to insure these guys, so they put them in an assigned risk pool, and the insurance companies have to insure you, but not at a reasonable rate. I mean, they can charge you what they want, or they may do some other stuff, put a breathalyzer in your car or some other form of embarrassment. But anyway, reducing automobile insurance premiums. Again, you can shop around, have a larger deductible, good driving record. The non-smoker, I guess it's just from the distraction, the car alarms. And then also, if you insure the vehicles, I think I got like 6 or 7, counting my daughters and different trucks and stuff I got, but they realize, okay, you can't be driving them all at the same time, so they definitely cut you a break. If I had those individually at different companies, it would be very expensive. And when winter comes, there's a couple that I'll actually take the insurance off, so there you go. All right, so that was kind of just the quick and dirty on insurance. There's not too much else to be said. I mean, insurance, and we'll talk more about this, it's more germane to life insurance. But what you want to do is you want to make sure it matches your needs, and your needs are going to evolve based upon your assets. So as you get, more money, more assets, and basically have more to lose, you want to be able to insure them. So as you get older too, your auto insurance will actually go down until you get very old, and then I guess it goes up again. Homeowners insurance is really not that much money, and it's well worth it. In fact, it's homeowners insurance. The argument for not getting replacement value, I don't know why you would do that. I would always want replacement value. So if that were to happen, I could go out and get it quickly taken care of. So for the homework, I listed both sections there in terms of both editions, and so it just goes into this, liability claim coverage, the 25, 50, 10. So you have to figure out what those are, and then you'll look and you'll see, how much these people are actually going to get, what's going to be covered. In terms of the project, some people look for some examples, but again, I don't want to give you a template. I'm talking the term project now. There's, I don't want just a kind of a cookie cutter kind of thing. I want you to kind of think about the different aspects of, your long-term financial plan and just sort of put it together. It doesn't have to be perfect, and what it does need to be, though, is hopefully tailored to you or to what you envision in terms of your future. So, but you'll want to look through a lot of things. I don't know if you guys have been tracking the stock market past couple days or whatever. I jumped out pretty much on the 25th of last month because everything was just looking very nervous, and now it's kind of all over the map. again, it doesn't mean stay away from the stock market. What it does mean, though, is you definitely, if you had a lump sum of money, this would not be the time to buy in, because you're probably buying at the high point. So you're going to see people talk about how it's going horribly wrong and all this other stuff. But I tell you what, those people, you never hear them when they're making money. So, but a correction is typically around 15%. The Dow's at about 16,000. Well, it was at 17,000. So if it goes down 1,500 points, that would just be a correction, and that'll be when I jump back in, hopefully. So, but they talk about catching a falling knife, which is hard to do and not something you want to try and do. So I'll probably let it bounce a little bit. But anyway, for those of you in the market, this is not the time to sell. Don't panic. Just ride it out, and things will go well. If you have any questions, let me know. I'm going to get to the homework this weekend. I had problems with one of the computer files, but I think we've got that squared away. And that's about it. Look forward to speaking to you next week.